Welcome to my YouTube channel, guys, and today we are going to be doing I'm going to be introducing you guys to supply and demand in forex. Okay, so today's video is introduction to supply and demand trading, and this is mostly going to be beneficial to the beginners, those new traders who are coming into the market and who are coming new to the market and have been exposed to the wrong information about trading. Okay, so in supply and demand trading, the driving force behind changes in price is supply and demand. Okay, guys, supply and demand is the driving force behind the changes in price. Okay, so whenever price increases, we know that the demand is in control, and whenever prices decrease, we know that the supply is in control. Okay, so when there are more sellers than buyers, the market prices will move down. Okay, and when there are more buyers than sellers, we know that prices will go up. Okay, so when buyers and sellers are more or less even, the market will range, or the market will go into a consolidation mode. Okay, which means that no one is in control of the market, that no buyers or sellers exceed each other, which means they are in equilibrium. Okay, so the market will move sideways into a range or a consolidation. Okay, this law of supply and demand is a theory that seeks to explain the relationship between the availability and the desire of a product, okay, such as a security and its price. Okay, guys, so supply and demand trading can be seen as a strategy to understand the zones in which can you look to enter into the trade. Okay, so we use supply and demand zones to enter into the market. Okay, so I'll just say that we use when the market gets to our supply zone, we enter for sales, and then when the market gets to our demand zone, we enter into buys. Okay, so mostly I like to tell people that with supply and demand trading, the trading becomes less risky, even though the risk is there, but it's lesser. Okay, guys, and if you can be able to identify the right supply and demand zones to act on, life becomes easy for you, trading becomes less stressful for you. Okay, so while support and resistance are defined by key levels of price, supply and demand is defined by a wider price area or zone. Okay, I'm not bashing support and resistance, guys. There are people who are trading support and resistance out there, and they are making a killing out of the market. I'm just not one of those guys. I'm into supply and demand trading, and this the strategy that I'm trading, which is the one that I'm introducing you guys into. Okay, so support and resistance is a level where traders see a lot of failed attempts at which price cannot surpass. Okay, this idea is familiar to most traders. Like I've said, guys, most traders, especially the beginners, when you start going into Google and searching about forex trading, you are going to mostly find information and PDFs and courses about support and resistance. Okay, so that's why I'm saying that the idea of support and resistance is familiar to most traders. Okay, so supply and demand is a much deeper zone which represents regions of key price levels of a broader support and resistance. Okay, so what I usually say is that support and resistance to us as supply and demand traders, it's like a trap zone. Okay, where most traders get trapped. They trap traders to accumulate the liquidity that they need to move the market, and then they go and hit their stop losses, and then they take the direction. So what means is that they were not taking the wrong direction. Okay, they just acted too quickly, or they just acted at the wrong zones. Okay, so in supply and demand, we have bases, okay, which define to us what is support and what is supply, sorry, what is supply and what is demand on the market. Okay, and usually you'll find price doing this, right? So when price does that, we find our supply at the peaks of price. Okay, I'm going to use okay, and we find our demand, at the bottom or at the troughs of price. Okay, so this right here will be our supply. This right here will be our supply, and then this right here will be our demand. Okay, the one below is our demand. Okay guys, so whenever price gets to our supply, we are looking to sell. We are looking to sell for price to go down. And then whenever price gets to our demand, we are looking to buy price to be going up. Okay guys, so in the market we find these areas at the peaks or at the troughs of price. Okay, and what I've just shown you, these are reversal. Let me just write here so that you understand what are these. These are reversal basis. Okay, so this reversal basis, this is how they form. Okay, I'm going to show you how they form now. So you'll be having price going up, you'll have price that is going up like this, and then price finds an area of equilibrium, then price goes down. Okay, so remember I said when sellers and buyers are more or less the same at an area, price gets into area of equilibrium like that. So now this type of a base, we call it your rally base drop. Okay, that's the type of a base. This will be your rally movement. This will be your rally movement. This will be your rally movement, and this right here will be the base. The base is an area where a decision is made whether to sell price or to rally price. Okay, and this is the drop movement. Okay, this is your reversal for sales, and then what you're going to do as a trader, you'll be waiting for price to get back to the base to mitigate, and then price will go down. Okay, so this is the reversal. As you can see, price was going up, and then now price reversed and then started to go down. Okay, so now I'm going to show you guys for the buy one. Okay, so you'd be having price going down and then price reaching an area of equilibrium and then price going up. Okay, so this area of equilibrium is a base. Okay, it's your base, and here this type of a base, we call it our drop base rally. We call it our drop base rally because the price was dropping, then price found an area of equilibrium, and then from there price rallied, breaking out of the equilibrium. So this type of a base, how you trade it is you'll wait for price to come back to the base to mitigate, and then price will continue or reverse to go up. Okay, so as you can see, why do I say reversal? Because price was going down and then it find area of equilibrium or area of balance, and then this movement here is the imbalance. Okay, why do I say the imbalance? Because the balance was here, right? The balance was here, and then the sellers, the buyers took charge of the market by moving it out of the balance area, and this now leaves an imbalance on this area, which will be now filled at a later stage here, and then price will be going up. Okay, so those are the two bases for reversal movement of price. Now I'm going to show you guys the continuous basis. Okay, I'm going to show you the continuous basis. So the continuous basis is actually what they are is, or the movement where price will continue with its initial movement. Okay, so in this area you will have your price like this, and then you have an area of balance here, so this here is what we call your drop base drop. Okay, this will be your drop, and also this will be your base, and you also have a drop again. Okay, so this type of movement, how you trade it, because you have your movement that has been going down and created your area of balance, and then now the imbalance was there where sellers were in control of the market, you have to wait for price to get back to the base to mitigate, and then price will continue going down. Okay, so this is a continuous movement because the initial movement was down, right? So this will be a continuous movement going down. Okay, I'm going to be showing you for the buy. Let me use red for the buy. Right, so we have an area of balance here where sellers and buyers were at an equilibrium here where there was no decision made. Okay, so this type of a base, we call it our rally base rally, which give us an advantage for us to continue with the market going up. Okay, this will be your rally base rally because the initial movement was in a rally phase. Okay, the initial movement was in a rally phase. So how are you going to be trading this? You're going to wait for price to come to the imbalance area to mitigate, and then price will continue going up with the initial movement. Okay guys, so these are the basics of supply and demand that you need to understand. Okay, these are the basis of supply and demand that you need to understand. These are more of like your foundation in supply and demand. If you get this stuff wrong, going forward it's going to be a problem for you because you do not understand the foundation. You do not have the foundation of supply and demand. Okay, so on the next video that I'll be recording, that I'll upload sometime during the week, I'll be showing you guys and sharing with you guys the market structure and how the market structure changes. Okay, I hope you understood the video guys, and if you have more questions, click on the video in my bio section. I'll leave a video there where you can connect with me on Instagram, on WhatsApp, or you can join my telegram channel there where I also share more knowledge. Okay, happy and good luck in your trading journey, guys.